Yeah, absolutely. There are some investors, like the very global investors, who would invest in everywhere in the world. Their focus today is really the U.S. because they see distress situations which are revealed and accepted, so they can go for them. They see Germany as a stable market, and what was a bit scary, I was telling you yesterday, in Europe, the second country was not France but Spain. And why Spain? Because they consider that Spain has now admitted the problem, and that they're trying to solve it, and that in France, we still are hesitating about admitting that we have a problem. And so they want to go for distress situations which are fully admitted, accepted, and negotiable.
Yes, I'm seeing new investors from new places, also new kind of investors. We see new Israeli investors. This is a country to which my links are specifically strong. And I can compare to the investors that came in 2004, especially totally different people, much more experienced in the real estate market. I see the first US investors entering the place. And indeed, we see Asian money. We see first, contacts coming from China. And you mentioned the right names coming from Singapore. I want to a little bit contradict or add up to what you've just said. The people that contact me, they are not scared. They are not looking for a safe haven to stay there for 3 years and then move out and go to fancier places. So the old theory that applied in 2004, basically moving from west to east. So when they were ready and experienced yield compression in Germany, they were ready for Poland. That is not the case right now. What they basically say is, yes, it's a stable place, but Germany is definitely a prosperous place. I mean, we all know the rationale of the stock markets, if it is a stable growth, that they predict global economic growth 6 to 12 months in advance. So if you look at the accumulation of the Standard & Poor's 500, of the Dow Jones, of the DAX, which nobody can explain currently and people have a hard time understanding, it may, and that's my view, predict the development of the German economy as far as the German stock exchange is concerned 6 to 12 months from now. I'm pretty sure that we won't see the 0.1 GDP growth that we saw in the last quarter. We will see increased growth rates, and this is exactly what my investors experience. What their view is pretty simple. A safe place, a prosperous place, more GDP growth to come, plus perfect financing conditions. I would also add to the CMBS thing you said, because we have the first experiences with CMBSs right now in Germany. That's interesting. So we get money at affordable LTVs. This is, of course, a bit of an issue. At perfect rates, and in a prosperous place with inflation looming 2 or 3 years from now. It definitely means that the cash on a 5 to 7 years fixed interest loan is not only there, it's increasing. And that should lead, frankly, to yield compression 2 or 3 years' time. So that's the perspective they're speaking about. And what is also different to 2004, they are prepared to longer term holding than the investors of the 2005 years were. So the perspective is today, we basically look at an upper curve. If that curve is 5 years long, 7 years long, fine, we can live with that. We don't have to exit at a certain point in time, but we may have opportunities to do it earlier. That's basically what I see. The investors that I experience now are much more knowledgeable, strange as it sounds, on the real estate, on the property side. I mean, in 2004 and yesterday when we had dinner, I could contribute a few war stories from the good old pre-financial crisis days when the Excel sheet basically dominated what they did. That is either to a lesser extent or no more the case today. I'm currently selling a large hotel to a totally new investor in this market, and I'm stunned how knowledgeable and experienced he is. It's an explanation job for us lawyers, because the knowledge is mostly, of course, on the property side. On the economic side, they have a very good grip of the macroeconomics and the development of the market. And we as lawyers have to explain what is different to their so far experienced country, where Germany differs and how we can do the deal still, and why that is a safe and stable system. So this is a little bit a change in role to 2004. Frankly, as lawyers, we had to get the transaction done, get the money of the bank done. Who cared about what we said? That's a little bit different. Frankly, I enjoy it.